The year 2020 saw many changes. From the nationwide lockdown due to the COVID pandemic to work from home becoming the new norm, 2020 has certainly been a year of drastic changes. Despite a lot of negativity in the air, retail investors' presence in the stock market took a surprising upturn, even as the lockdown ravaged business outlook and consumer demand. Retail investors held out in 2020, displaying increased participation in the markets. The industry witnessed a sharp growth in the NSE active clients, which is reflected in the strong growth in the average daily turnover. The NSE cash segment hit an all-time high turnover of 1.47 lakh crores on the last day of November. The market turnover is gradually rising, and in November was 66,864 crores, and October was at 52,328 crores. Within the 8 months of FY21, around 7.7 million new Demat accounts were opened, which was a growth of around 19% over March 2020. Around 3.3 million Demat accounts were also opened during the period of September to November 2020. IPOs in 2020 have been a big hit. The recent ones like Burger King and Mrs. Bector's have received a delicious response. Market watchers expect that the traction in the IPO market will continue in 2021 as well. More than 30 IPOs worth over 30,000 crores have already been lined up for the new year. So which cities in India have shown potential? According to the data at hand, Tier 2 and 3 cities display untapped potential. Nearly 62% of the retail cash turnover come from cities beyond Tier 1. However, Demat penetration continues to remain low in these cities, leaving ample room for growth. While technology disrupted many businesses, the adoption of technology in the broking industry augured well for the stock markets in general and retail investors in particular. Experts believe that India's demographic dividend can help the stock markets expand. Millennials have a higher risk appetite and the ability to trade through volatile markets, and they are expected to dominate the workforce in the coming years. Here's what companies have to say. Zerodha, India's biggest stockbroking firm, saw an almost 250% bump up in the new account openings from pre-COVID levels. Almost 69% of these clients were in the 20 to 30 years of age group. While the newly listed Angel Broking mentioned that their overall ADTO grew by 416% YOY and 17.5% MOM to 2,260 billion rupees in November. According to a Nirmal Bang report, the revenue of equity broking industry grew from a mere 12,800 crores in FY15 to a whopping 22,000 crores in FY20, while it's projected at nearly 40,000 crores in another 5 years in FY25. SIP flows in 2020 took a hit due to the income constraints and job losses during the pandemic. The inflows hit a 31-month low in November to 7,302 crores amid a challenging economic environment. Analysts say investors want to maintain some kind of liquidity at their end and are taking interest in direct equities. Will this trend and strong traction continue into 2021 as well? Well, here's what Nitin Kamath has to say.
The year 2020 was, fortunately for us, a very good year as a stockbroking firm. What happened this year was work from home enabled a lot of people who are fence sitters deciding to whether invest or not in the markets to finally open their trading and Demat accounts and open. So there has been a rush of first-time investors this year. Also, thankfully, the markets have done well. So people who have come invested have actually made some money. The outlook for 2021, I think I'm not as bullish, but then I guess there are a lot of people around us who are pessimistic about this market rise. But we've already seen a rush. We've already seen a big move in the market. So I don't know if this will really continue with the same ferocity or not. But hopefully the next year there is a vaccine and all of us can get it, and we're the worst is behind us.